The last crash was 34%. That's the biggest crash we've had in modern history in housing in the U.S. This one should take us back just to those 2012 lows. But that would be 50% for the average house. So places like California, Arizona, Austin, those are the biggest bubbles. This is going to be the biggest crash in housing of our lifetime, and then we'll probably never see one again for decades. Housing does not crash as often as stocks, so it's best to target the lows. So whatever the house or market you're looking at, what would that house been in mid-2012 around the last bottom? That's the best time to buy when you see housing prices get there. And I don't expect that until at least 2024 sometime. The government, since 2009, it's just been stimulating, things slow down, they stimulate more. So they've basically taken over the economy, and they created this second bubble. This second bubble would not have happened if they had not gone to long-term zero interest rates and made housing just a slam dunk to buy and make it irresistible. So they created the bubble, and now they're going to fight it. Use the stock market as your leading indicator. Stocks crack first. The more stocks crash, the more housing's going to follow. The stocks are getting ready to crash for a second time. You want to sell your house before that happens, because that's going to be alert for everybody. Housing takes longer to crack, but it also takes longer to sell and freezes up very quickly. It takes 3 waves down to complete a major bull market or a major bear market. That first crash, in my indicators show us we've already begun the second wave down since mid-August, but it has to make new lows to accelerate and go a good bit lower. If that happens, that's only the second wave, and then further down, say in the next year or so, into 2024, we'll get a final wave down. So you can't feel like this thing's over normally until you see 3 healthy waves down, and we've only seen the first. So this is not a buying opportunity in stocks. And if it's not a buying opportunity in stocks, it definitely is not in housing. And you'll have plenty of time for buy opportunity in house. Housing took years to turn around. Stocks bottomed last time in early 2009. Housing didn't bottom until mid-2012, 3 years later. So housing, you'll have plenty of time, but stocks, you're going to want to get back in July 2024. That's when I would expect a bottom. Same thing. Bitcoin is ahead of stocks and will probably bottom before stocks, maybe late in 2023, where stocks might be mid-2024, because it's kind of the leading sector. It goes up more, it goes down more. It's already been down 70% when stocks were down 34 to 38 on the NASDAQ and 25 to 27 on the S&P. And I'm just following the same bubbles in Amazon and .com. The same exact proportions, the bubble and the burst in the .coms is now 22 years later. That crypto will bottom around its late 2018, early 2019 lows around 3,250 to 4,000. And so it's still, even at 16,000, down 70%, it will be down 95% if we do the same thing we did with the .coms. So it's not time to buy crypto later, but I also advise crypto is the next big thing. The blockchain technology is real and will emerge after we wipe out all these ridiculous coin companies. I would be looking to buy the leaders, Bitcoin, Ethereum at the bottom, and I'm not looking for a bottom until we retest those lows in late 2019. They bubble up way beyond the fundamentals, crazy, and then they go back to where they started. That is 3,250 to 4,300 on Bitcoin. That's where it should go. Bitcoin could go to $500,000 to $1 million. My actual target right now today is the next boom will take it to a peak of 780,000. But anywhere there is going to look good when it ends up back where it started at 3,250 or so. 2008 was the first bubble and the first burst, and it did not go through like 29 to 32. It didn't erase the full bubble. Government stepped in and stimulated extremely hard and did it for 13 years until recently. They stopped the bubble from bursting. So we have to go back and wipe out this bubble. Bubbles are not bad. They basically help launch a new sector and raise a lot of money for a lot of new companies. The point is, though, all those new companies can't make it. You have to shake them out. So this shake shakeout stage, which we're in and we'll be in for a few years, is important also. So you have to buy the winners at the bottom. And I'm going to tell you, Bitcoin's going to survive this. I'm going to buy Ethereum and Bitcoin in early to mid 2024, maybe late 2023. The treasury bonds are what do the best because the money has to run somewhere, and the U.S. treasury bonds were the best safe haven, and the 30 years better than the 10. And ZEROS, which is an ETF that has 25-year average treasury bonds, will do about 50-60% better than TLT, but TLT is more liquid and easier to buy and sell. So that's where you put your money, either in cash or you buy TLT, ZEROS, or 30-year and 10-year treasury bonds. You can buy AAA corporates and they'll hold up well, but nothing will hold up better than the safest bonds. For most people, they should just sit in the treasury bonds, and the treasury bonds will go up less fast than stocks go down at first, but at the prices like in mid-2008 to late 2008, the treasury bonds will go up the fastest, go be better than anything. So you have to be more patient on them. And when you see them bubble up, then you get out of them. Here's the best way to view it. Instead of the crash of our lifetime, look at it as the buying opportunity of your lifetime. Real estate reacted differently than stocks, and commodities crashed way before. Everything's going to go on sale. Commodities, gold, real estate, and all sectors, high and low, luxury, not, stocks, things that bubble. The greater the bubble, the greater the burst. So you can use that as a simple guide. All you do is get out of the way. Be safe. If you protect your money, okay, you're missing, well, maybe the markets claw back some and maybe this thing doesn't go as low as I think. Sale, and the only way to take advantage of that sale is to be liquid, to be in cash or high quality bonds that preserve your value or grow. And then you turn around. That's why I said, if these bonds do bubble, this will be the last bubble. The final bubble in all these bubbles will be the treasury bonds. If those bubble, then you sell those and you convert those back into long-term growth assets like real estate and stocks, all the things we like to own long-term. Be safe, be liquid. Just a year and a half from now, probably, everything's going to be on sale. At that point, people will be too scared to buy. That's when the smart money buys. You'll never see stocks or real estate or anything at these prices again, just like nobody saw them after 1932 to 33, ever again.